Your take on the news, market reaction.
Well, I think it's nice to get a good piece of geopolitical news right after all the turmoil the last couple of weeks. That's nice, and the market's kind of reacting accordingly. From a longer-term perspective, though, I think the real focus that I've had is that Brexit is bullish for Europe. Not so much for the UK, obviously, but for Europe, as it forces Europe to integrate more closely. And I think this allows that to continue to happen, and that's really the opportunity. The opportunity is not so much in the UK, as I see it. The opportunity is much more on the continent and with Europe more broadly. And then within Europe, I'm particularly constructive on the southern tier of Europe, in those markets in particular.
So, Sarah, how about that? If, in fact, this does cause the rest of Europe to integrate more closely, what kind of upside is there for Europe?
Well, I think we're already seeing the European recovery strengthen and become more self-fulfilling as we've seen it broaden. And so I think even further integration and really the removal of this uncertainty surrounding Brexit is going to be an overall positive for the European outlook. And we will likely see the ECB continue to move towards reducing accommodation and further raising rates with that outlook improving.
And of course, this comes on the heels, though, of the BOE meeting on Thursday. SocGen, Sarah, writing that this means that you could see a more hawkish BOE. You definitely want to be selling gilts. Would you be of the same mind as that, Sarah?
Well, I think we've already seen the MPC tilt towards more hawkish views over the past couple of weeks, which is one of the reasons we've moved up where we think the MPC will make its first rate move for the year to May. And so I think this really solidifies that. So as David was saying earlier, that you have a lot of the uncertainty being taken off the table. So business investment slowed in the wake of Brexit. It's been hanging in there, but this really removes a lot of that uncertainty to where they should be picking up. And so that's also constructive for the UK outlook.
So, Jay, I think I understand the argument this helps Europe because it maybe knits them together more tightly. Why isn't it also good for the UK? Because there's been a lot of uncertainty there. The pound has really weakened a lot. Why won't investment come back into the UK if that uncertainty is removed?
Well, I think it does help the UK at the margin, right? Things have been very tough there. But ultimately, UK is a much smaller market. And in terms of like financial markets and the equity market, it's really made up of miners and commodity producers and banks.